obviously telling you guys to be selling above 80. And it's basically S&P looking expensive above 80 at 8:17 p.m. Yesterday evening. At 8:17 yesterday evening, the price, we'd already started to sell it, of course, as I explained, and it's still at 8:13, it's still at the top edge, and at 8:22, it's still at the top edge. So 5 minutes after we've already been selling into this, you were able to sell above the 80. Your sell would have been right there. Now, it's not the fact that I've got inside information on this, is it? When you look at that tweet, you think to yourself, wow, okay, so that trade went on to make $4,000 per contract, but how did you know about it? How did you know about it? Well, this is obviously one of those questions. How do you know about this trade? Well, is it because you're a specials trader? Is it because you've got information that nobody else has access to, or anything else? Or is it simply just because that's what every single one of you should have been doing from yesterday's highs? Well, obviously that's up to you to try and verify from your own analysis, but let's take a look and see what it was, the reason why we were selling so aggressively above 80. Because there's our tweet price right there, 80, there's our tweet price. Selling above 80, let's see what happens. So first of all, what I said to the guys in the London session was, does anybody not see the sell? When we look at the sentiment line, does anybody not see the sell, guys? Anybody think the sell's invisible? Anybody think the sell's invisible? What do you think? Look at the value on that trade, guys. It almost looks like a negative correlation. Now, when I see that much value, of course, I do have a concern. I have a real money concern, because I'm looking at it saying, okay, well, it's definitely a sell, but perhaps there is a reason for this, and I want to verify it through other means. I want to look at it from a growth dividend perspective. I want to look at it from a volatility perspective to get some market internal ideas. I need to get into those ideas to see what if they confirm what I'm seeing here, which is enormous sell side only value, and there's no chance of a buy, is there? We are probably $1,000, $2,000, possibly $3,000 away from ever being able to get into a buy trade here based on sentiment. So I am definitely selling the top edge. Now, when I look at the volatility and I look at the NASDAQ against VXX, this is what it looks like. Does it still look like a sell? Yes, it still looks like a really, really good sell. NASDAQ against VXX. You might say, but that's you using the NASDAQ on both narratives, and that could be the problem. Perhaps the NASDAQ's taking a beating that perhaps isn't going to offset with anything on the S&P. Well, let's take a look instead at the S&P against the VXX. And we can see that the SPY VIX was also diverging. So what's your argument now for not taking the trade? The SPY VIX was also diverging into exactly the same top edge. So what's your excuse? No excuse. Okay, good, we can move on. So what else could we look at? We obviously talked about the idea of using things like the dividend kings against the growth stocks, IWM, IWO, GIG, FID, NOBL, REGL. And if we look at those as signals, growth against dividend, let's take a look and see what they do. So if it's not specifically a name in the NASDAQ, let's see what happens. Well, my goodness, look at that, guys. If it's not a name in the NASDAQ and we're simply looking at growth ETFs against dividends, we can see that there is an enormous value divergence into that higher print from yesterday. So it doesn't seem to matter what we look at. There was a massive value in getting short off those high prints. Correct? Damn right it's correct. It's all about the rotation then, isn't it? It's all about the rotation. Now, when we look at the highs, lows, the banker bets, was there any divergence on the banker bet, guys? Yes or no? Oh my God, there's even divergence on market breadth. Who would have thought that you would even get divergence on market breadth, guys? Unbelievable. You've even got market breadth divergence. So you've got sentiment divergence. You've got volatility divergence. You've got growth dividend divergence. And now you've got internal market divergence. Wow. So my tweet for the idea that 20 likes that saying that S&P was expensive above 80 was really just a 2-minute job of looking at lines to get value, guys. Nothing special, nothing unusual, nothing really spectacular, and yet it still led to a $4,000 per contract sell-off on the S&P. Do you know it's going to lead to $4,000? No, but based on the value that you saw evolving in those areas, did it look like it was going to be a big sell-off? Damn right it did. Damn right it did. And the sell-off we got from that sell trade was absolutely spectacular, really. The sell-off we got just kept going from the gun. So we had the electronic restart at 11 o'clock, which came in here, and it went sell side from the gun from the electronic restart. We held a bottom edge, bottom right-hand hold here, and we carried on going, and then we sold again and again and again and again, and you can see all these little bearish order blocks. We took out this wholesale price, we took out this price, we held this price at 30 for a while, and then we took that one out as well, and we kept going. And it was just the most incredible, easy money sell you've ever seen in your entire puffy poos. Look at that, guys. 37.80s, 36.90s, $4,000 per contract with a drawdown of 0. Literally, the bid offer spread on that sell at 80 after the tweet, a drawdown of literally $12.50 and a profit of $4,000 per contract. $4,000 per contract by the time we reached into the London lows here. And you guys think trading's difficult. It's only difficult because you make it difficult. It's only difficult because you don't trade the good stuff. You trade the average stuff all the time. And that's not a word of a lie, correct? You trade the average stuff a lot of the time because you don't know what the good stuff is. Why do you not know what the good stuff is? Because you don't spend enough chart time analyzing it. You're too busy trying to trade it. You're never getting to know this stuff. You're in too busy a hurry to make money. And because of that, you're not going to make any money, guys. You cannot be in a hurry to make money. You've got to know what great value looks like. And the only way you can do that is if you analyze what value does. You see how big and wide value becomes. Reeve made a mention when I was talking about the inflation trade, about the idea of waiting for the bubble to form big enough before you take the deal. And there's lots of ways we can do that, of course. But obviously, you've got to know it for yourself. You've got to be able to recognize on whatever time frame of reference with whatever size of stops you're doing that value is that good. Well, yesterday there was no question. It didn't matter whether it had a 1-minute chart, a 5-minute chart, or a 15-minute chart. The value was outstanding on every single last one of them for $4,000 sell-off. You're too busy over trading in areas that simply have limited value. Limited value. And obviously when we look at that and we look at the idea of limited value, we can obviously very simply recognize the huge opportunity that last night's top edge at 80 really presented. And sure enough, we tweeted it for you and we got ourselves $4,000 per contract from a tweet. A tweet! A bloody tweet! $4,000! You're having a laugh, aren't you? No. No, we're not having a laugh, are we? God's honest truth. $4,000, guys, from a top edge sell that you could have been involved in if you wanted to. Drawdown, $12.50. Pretty good? Well, 20 people think it's pretty good, which is probably as many as we've ever had for a normal trade, which is pretty awesome. Usually if I type in a load of rubbish, it's getting 30 tweets, 30 likes, but any trade stuff, 20 likes is a record, I think, guys. It's a record.